I always say my favorite part of the show is answering questions directly from you. Tonight, I'm bringing in Jeff Marks, my portfolio analyst, partner in crime. Help me answer some of your most burning questions. Could usually have some tough ones. For those of you who are part of the investing club, Jeff will need no introduction. For those of you who aren't, I hope you will be soon. I would say that Jeff's insight and our back and forth helped me to do a great job for Mad Money viewers as well as members of the club. Jeff and I do this sort of thing during all our monthly meetings where we give you an in-depth look at our latest portfolio decisions. We talk about every single stock and answer your burning questions. If you like this to be something to keep up with, I need you to join the club. And thank you, by the way, to people who stop me on the street who love the club. It means the world to me. So let's start with a question from Michael, my home state of Pennsylvania, who asked, what do you think about dividend reinvestment strategies? Okay, so Jeff, one of the first things I learned and what I taught at Goldman Sachs was it's one of the great free lunches of our business. You just keep letting it ride. And I have seen in my lifetime the dramatic amount of money you make from the dividend reinvestment.
Yeah, absolutely. That's how you take advantage of the power of compounding, by reinvesting those dividends quarter after quarter. Now, unless you need the income, of course, depending on where you are in your life, that may be a reason not to, but always reinvest. And it works for high dividend stocks like a consumer packaged goods stock, or even tech stocks too that offer a dividend. It's a good thing to have. It's another way to dollar cost average into positions as well.
I mean, I remember going over this with my late father, where he was adamant you just take the money and run. And I tried to show him and managed to convince him, no, take the money and be back in, reinvest. Now we're taking a question from John in California, who asked, what are your sources of information related to stocks in the overall market, economy, sources that you go to daily? All right, well, look, I make no bones about it. We have all the research in the world. And it's one of the great things, the luck that we have is we get everybody's research. And I tend to let that control things, as, by the way, when I do the Mad Dash. And I talk about maybe the most important research calls of the day. So we're blessed with that.
Yeah, absolutely. But on a daily basis, you can also read annual reports that companies put out, investor presentations, transcripts if you can get your hands on them, not only for quarters, but all the conferences that are happening every single month.
Really important to look at those, particularly after a quarter. I have to tell you, I more and more have started at the website of the company, for the companies I don't know. I'd rather go to the research, because the research will have maybe a snapshot summary, but no, you need more than that to understand things. All right, now let's go to Nino in Maryland, who asked, is there a P/E multiple that we won't buy above in each sector? Well, this is really tricky, because when you're in tech, we have to use out years. So, for instance, NVIDIA, if I had discipline and said that I wouldn't pay more than 20 times earnings, I would have kept out of NVIDIA for a decade, because NVIDIA is about future earnings.
Yeah, and I think you also have to look at a company's growth rate, too. It's all relative. PE is so you can compare the growth rates relative to their multiples. I don't think there's necessarily one that would keep me out. But also, on the other hand, you can't look at a low multiple in two and say that's a good bargain, because sometimes there's value traps. They're a low multiple for a reason. They could have declining earnings, or there just might be another issue fundamentally at the company.
That's a great point. I mean, when people look at the automobile stocks, they've historically had very low multiples and just trade on dividends. If they ever really got the growth of a Tesla, the stocks would be triple from where they are. So anyway, thank you, Jeff. I'd like to say there's always a bull market somewhere. Promise try to find it just for you right here on Mad Money. I'm Jim Cramer. See you